All right, let's talk about market roller coasters. You know that feeling, right? When everything's dropping and your stomach is in knots? Do you want to just jump or do you have a plan? Well, today we are talking about exactly that. We're going to break down how you can actually profit from those crazy swings instead of just panicking. Let's get into it. So, right off the bat, let me ask you something. When you look at your portfolio and it's just red everywhere, what's your gut reaction? Is it, okay, stick to the plan, or is it more of a, oh no, sell everything kind of feeling? Seriously, think about it. Because your answer there, that's the key to this whole thing. Okay, to figure out how to win this game, you've got to know who you're playing against, or in this case, who you're in business with. So let's introduce you to someone, a guy named Mr. Market. Now, this is just a metaphor, but trust me, it's a super powerful one for understanding the stock market. Thinking about it this way, it changes everything. So imagine this. You have a business partner, Mr. Market, and every single day he shows up and offers to either buy your shares or sell you his. But here's the catch. The guy is totally manic depressive. Some days he's euphoric. He thinks the future is amazing and he'll offer you crazy high prices. Then on other days, he's an absolute mess, convinced the sky is falling and he'll practically give away his shares for pennies. And this is where the rubber meets the road. You basically have two types of people reacting to Mr. Market's crazy moods. You've got the emotional crowd, the ones who get totally swept up in the hype. They get hit with a massive case of FOMO, that's fear of missing out, and they buy when prices are sky high. Then, the second Mr. Market gets depressed, they panic and sell at the absolute worst time. But then you have the successful investor. And what do? The exact opposite. So, how do you become that person? How do you get on the right side of that table? Well, it all starts with a huge mental shift. You have to adopt what's called the contrarian mindset. That's it. That's the secret sauce right there in one sentence. It's not about being a genius or having some kind of secret algorithm. It's about being more disciplined than everyone else. Your entire job is to be calm when everyone else is freaking out. You buy when they're scared, and you get cautious when they're greedy. Now, let's be super, super clear on something. This is not about trying to time the market. It's not about predicting the next big crash or the next big boom. Nobody, and I mean nobody, can do that consistently. This is about something way smarter. It's about having a plan for the unpredictability. You're not trying to predict the future. You're simply planning for something you know is going to happen, human emotion. Okay, so you've got the right mindset. That's step one. But now you need the actual tools, the playbook. This 5-point plan is your step-by-step guide to dealing with Mr. Market's chaos. It's how you turn that contrarian idea into real-world action. So here are the 5 big plays. First, keeping dry powder, which is basically your cash stash. Second, creating buy lists before you're in a panic. Third, accumulating your favorite stocks systematically. Fourth, a clever move called tax loss harvesting. And fifth, rebalancing your portfolio. Let's dig into each one. All right, first up on the playbook, dry powder. Fancy term, right? It just means cash, cold, hard cash. The smart money, they try to keep somewhere around 20, maybe 30% of their portfolio in cash. Now, I get it, that sounds kind of crazy. Especially when the market's on a tear, you feel like every penny should be invested. But listen, this cash isn't just sitting there doing nothing. It's not dead money. It's your secret weapon. It's pure power. And this is what that looks like. That slice of the pie right there, that's your opportunity fund. See, when Mr. Market eventually has his meltdown and starts throwing a clearance sale on great companies, your dry powder is the ammunition you use to go shopping while everyone else is running for the hills. Now, here's a really important rule. You never decide what to buy in the middle of a 5-alarm fire. You do your homework when the market is calm and boring. You make a shopping list, a pre-vetted list of fantastic companies you'd be thrilled to own if only you could get them at a discount. That way, when the sale does happen, you're not making emotional choices. You're just executing a plan you already made. So the prices of those companies on your list start to drop. What do? You don't try to be a hero and catch the absolute bottom. That's a fool's errand. Instead, you buy in pieces. The stock drops 10%, you buy a little. It drops another 10%, you buy a little more. This way, you take all the pressure off of perfect timing and instead focus on getting a great average price. Okay, step 4. This one is a really slick move called tax loss harvesting. Here's how it works. Say you have an investment that's down. You can actually sell it and lock in that loss for tax purposes. And you're probably thinking, wait, why would I want to lock in a loss? Well, here's the brilliant part. The taxman lets you use that loss to cancel out the taxes you'd owe on your winning investments. It can even offset up to 3 grand of your regular income each year. It's like finding a silver lining in a market downturn. And finally, step 5 is all about discipline. It's called rebalancing, and you usually do it about once a year. So let's say one of your stocks has an incredible year and now it's a way bigger piece of your portfolio than you planned. Well, that's risky. Rebalancing forces you to trim that winner, which is selling high, and then you take that cash and put it into the parts of your portfolio that are lagging, which is buying low. It's like putting your contrarian mindset on autopilot. And this chart just puts it all together so perfectly. Look, every strategy has its time and its place. Dry powder is what you do always. You build your buy lists when things are calm. You accumulate and tax loss harvest when things are down. And you rebalance once a year to keep it all on track. It's not just one trick. It's a complete system for any market weather. So we've gone through the mindset, the playbook, the whole shebang. But what's the one thing, the single most important idea you need to remember from all of this? It really all boils down to this. Success in investing, it's not some secret code only geniuses with crystal balls can crack. Not at all. It's for anyone, literally anyone who can build a simple plan and then has the discipline to actually follow it. Especially when your gut is screaming, do the opposite. A solid plan that you stick with, day in and day out, will beat an emotional gut reaction every single time, period. So I want to leave you with this one last thought. A question, really, because Mr. Market will panic again. That's not an if, it's a when. He's going to have those euphoric highs and those miserable lows. That's a guarantee. The only thing that's not a guarantee is how you'll react. So the next time it happens, are you going to follow the crowd off the cliff, or are you going to follow your plan? The choice, as they say, is yours. And that choice, that's where you find the real profit.